Welcome back, traders. And in this lesson here, we're going to be talking about Japanese candlesticks, or what I like to call the Eastern knowledge. And so we'll get right into it. And what is candlesticks? A candlestick chart, also called Japanese candlestick charts, is a type of a financial chart used to describe price movement, its price, actual price action, price data of the markets. Each candlestick typically shows a time frame. It could be a daily chart, it could be a monthly chart, or even intraday charts on shorter intervals. It's like a combination of a line chart and a bar chart kind of intertwined into one, and each of the candle bars represents four important pieces of information. Price information. It's the open price, it's the high price, it's the low price, and it is the closing price. And all being densely packed with information, they tend to represent the trading patterns, different trading patterns. It could be intraday, it could be daily for swing traders, monthly, quarterly, and so it's just taking that data and putting it into a visual representation. All right, so let's have a look at this here from a bar chart versus a candlestick chart perspective. At the top, you see here we have the bar chart. This is Western world's old way of charting price action. And as you can see, basically you're dealing with the open, the high, the low, and the close. As you can see here, it opened here, the high was here, the low was here, and the close was here. We have an open here, a high here, a low here, and a close here. Now, reasons why one's painted in red is green as opposed to red. The close was, it closed price, the closing price was above the open price. See here? Open, close, open, close, open, close. Now here, you have an open, you have a high, you have a low, and you have a close. So it's painted red because the open was higher than the close. So that would be looked upon as a bearish condition as opposed to a bullish condition here. You have the open here, the high here, the low here, and the close right on the low. So that's once again bearish. Now, with the Japanese candlestick charts, what they decided to do was just to paint that entire bar. The price action of that bar is painted all the way across. And in the Japanese candlestick, you had the open here, you had the high here, the low here, and the close here. Once again, open here, high here, low here, and close here at the top. Open here, high, low, close. Now, bearish side, you had the open here, the high here, the low here, and the close here. The open here, high here, low here, and close right where the low is. And so from a visual perspective, you can see that the Japanese candlestick gives you an edge over the bar, regular bars. You see that? The candlestick charts is often used for technical analysis. Well, you can read the chart visually. And they do tend to give you some really, really important information, as you'll see. Now, the Japanese begin using the technical analysis of a chart type, if you will, back in the 17th century. This earlier version of technical analysis was different from the U.S. version that was initiated by Charles Dow back around the 1900s. And the what, being price action, is more important than the why, which is the news, earnings, and things of that nature that the dial sort of is driven off of. All known information is reflected in the price. Buyers and sellers move markets based on expectations and emotion, fear and greed. Markets do fluctuate. The actual price may not reflect the underlying value. According to Steve Nison, which is the fellow that actually brought Japanese candlesticks to the Western world, and he gets the credit for exposing Mr. Homma, which is the Japanese trader that discovered the Japanese candles. And so that'll just kind of give you an idea what or where, the whys and the how ofs. But we'll get into some visual aspects of it in just a bit here. All right, so here we have some live charts we have set up for you today. I'll just do some examples here. It's the NASDAQ 15-minute chart. This is a bar chart. And we have the NASDAQ 15-minute candlestick. All right, so on this bar chart you can see here, we'll start with this bar here. I want you to look up above right here, this legend right here, some information that I want you to focus on. It'll give the time frame, the open, the high, the low, and the closed pricing data for that specific bar. And if you go to another bar, it'll do the same thing, right? So on this bar here, we see we have an open price 74.07 quarter. Then we have a high price 74.15. Then we have a low price 74.06.50. And then we have a closing price here 74.13 quarter. And so if you look at in retrospect with the candlestick, same thing. We have an open 74.07 quarter. We have a high 74.15. We have a low 74.06.50, and we have a close 74.13 quarter. And so if you was to go to the next bar here on the bar chart, something important I want you to look at. The next bar opened where the previous bar closed. You see that? But check this out. The bar was painted red. On previous charts in the past, it was just black bars on a white background. But here, it gives you a little help with the bar charts. But here, look here, we got an open here, 74.13 quarter. We have a high, 74.14.50. We have a low, 74.08, and we have a close, 74.08. Now that's some very important information, and we'll decipher that in just a bit here. So as you can see, with respect to that bar, that second bar there, the candle was painted red also, but you get a good idea what that candle looks like having it closed in, boxed in right here. You see that? So we have the open 74.13 quarter, the high 74.1450, the low 74.08, and the close 74.08. Whenever you have, and just you want to make note of this, whenever you have an open where you have a candle that opens close to where the previous bar closed, and you have a closed price equal with the open, with the low price, that's a definite trend changing indication. Remember that, it's very important. And so if we look at the next candle over here, we can see that it opened fairly close to where it closed. See that? We have an open at 74.25. We have a high 74.11.25. We have a low 73.92.50, and we have a closed right here 73.96.50. So the closing price was lower than the opening price. Once again, bearish. And we have a doji. Oh, these little dojis are gems, and we'll get to, when we get to the lessons talking about dojis, you're really going to love that. Really going to love it. But as you can see, price just continued to go down. Now, look at what happened here. Just like up here, we get a well, you had this bar closed at 73.85.50. The next bar opened at 73.84.50, and we had the high 74.70 we had the low 73.82 and we had the close 73.97 So once again here we have a bar that opened where the previous bar closed, and then it closed above the opening price. Now that could be considered a fake out breakout right there, and that's some other things. But look what happened. The next bar, we get an inside bar. You see that? Where this bar here's high is higher than this bar's high, and this bar's low is lower than this bar's low. And so that's considered an inside bar. When you have an inside bar, it's sort of a confirmation from this candle right here that it is the bearish trend will continue, and that this was just a little fake out breakout shakeout right there. It was just trying to catch some people. Something took place that caused this bar. But as you can see, price action continues to go down. Now, when it gets to this point here, we have an open here, 73.79.50. We have a high, 73.81. We have a low, 73.62, and we have a close, 73.76. So once again, you had the closing price lower than the opening price. But look here what happens. You have this long wick, this long, what's in the industry it's called a bottom tail. And that's we'll get into that in future lessons. But bottoming tails sort of gives the trader some information that the downward trend is ending, and to start looking for an upward bullish trend. So here it goes up, opens here, closes here, it opens right there again where the previous bar closed, and it closed above it. But look what happened, another inside bar. So this was another fake out breakout. And visual representation, it's hard to see it here. If you're a bar chart reader, you could pick it up. These are called Lincoln top hats. Top hats are patterns, bar chart patterns, but I love Japanese candlesticks. And as you can see, we got the two candles here, and then inside bar, and then boom, down. We got this one candle here. It tried, it didn't get above this previous one, and look, it opened and it went down again. So I will leave some information in the description where you can get a guide that I put together regarding candles. And I would strongly like for you to subscribe this video and like it. I really would appreciate it. And it would allow me to notify you when we get some new tutorials and training for you to take advantage of. Okay? Now, as a quick example here with respect to the Japanese candlestick, you can see here where price, let's see if we can get a little closer here. You can see here where you had that inside bar we talked about, and then another lower closing price with respect to this one and this one, and then another lower closing price here with respect to this one and this one, and then finally a lower closing low. But look at what happened. This one here had what's called a wick or a tail, a bottoming tail, and it opened here, and you had the high here, you had the low here, and then you had the close here. It still closed lower than it opened here, but the next bar, you can see what happened. It opened here, right where it closed on this bar. It opened here on this next bar, and you had the high, you had the low, and you had a close right here, which is higher than this close, the previous bar close. So that is a bullish indication right there. And as you can see what happened after that, it opened on this next bar here. You had a high here, you had a low here, and you had a close here. So that's two bullish bars in succession here, and it goes up. So you can tell from this bar here, this bottoming tail type of a bar gives you an indication that the trend is about to go in a different direction from down to up. So that's another way you can visually look at the charts and come up with a part of your trading scheme as to how you're going to trade the price action based upon the candlestick representation on your chart. Okay, that's very important. Remember that. And so there'll be some other things coming down the pike, but for the time being, this is your Japanese candlestick. All right, folks. So that's going to do it for me for today. There'll be more videos coming down the pike where I'll get into some formations and little nuances of these candlestick charts that you could use to help you. See, this is a topping tail, doji. It's just little different things like that. But I'll put some links in the description down below where you can get access to a charting package where you can look at some charts, different bars compared to Japanese candles. And also, don't forget to subscribe and like this video. I would really appreciate it. It kind of lets me know that if I'm doing a good job, you want more information, then subscribe, and you'll get notified when the new videos come out in the future. All right. So we'll leave it there, and I'll see you next time. But for right now, goodbye for now. Take care. And as a disclaimer, I'd like to say that trading is extremely risky and can result in substantial financial losses. You should never trade with money you cannot afford to lose. Trading is a zero-sum game that will have winners and losers. You should seek out the services of a professional dealing in the financial matters before you put your money at risk. The videos that are produced are for educational and entertainment purposes and is not a trade calling service. And you should get properly trained before embarking upon the trading arena. And this is where I give you an opportunity to become a subscriber and get posted when I do put up the videos. I think it will be of benefit to you, to help you. And so just know that there is training for you available to take advantage of. And finally, you'll see two links that I have there. Both are from government sites available for you that to answer any questions that you may have regarding day trading or trading activity that the government posts. All right?